It's a voice of sanity and a man who is my go-to opinion as far as economy is concerned, whether it's global or Indian. It is indeed my pleasure to interview Raghuram Rajan, India's RBI governor, right here in Davos. Thank you very much, sir, for being with us. The mood at Davos and the discourse around it is rather rocky, and we've had a rather rocky start to 2016. Many people believe everything that could go wrong has gone wrong this year. Has the RBI governor been taken by surprise?
Well, I don't think anybody foresaw the extent to which markets would adjust. However, one has to, at times like this, look to what's really the strength of certainly our economy, but the world also. And I think we are in a process of slow recovery in the world. In India, I think it's a steady recovery. That I think the GDP numbers, one could debate whether they should be higher or lower,
right.
But broadly, it seems to me they reflect the strength of the economy. And I think things are picking up, that people look for iconic items like GST and sort of hang all their hopes on them. But there is reform happening. For example, in the financial sector, over the next year, we're going to see 21 new banks. That's going to be a lot of jobs, a lot of new activity, a lot of people included in the financial system. We're seeing technology being brought to bear in the financial system. Inflation is down. The current account deficit, even despite these trade numbers, is likely to stay within the 1.5%. So broadly, we have macro stability, and we have an environment with all these new initiatives the government is taking, like the Prime Minister's, Startup India. The possibility of a change in the business environment, which will encourage a whole lot of entrepreneurship.
You've done your job that you are supposed to do, which is talk up India, and I'm going to refer to now the pain points in the world and the commodity crash that the world has seen and the extent of the commodity crash. Does tell something about the world that we live in, does it not?
Well, not always. I mean, why is the oil price so low? I think if you look at, for example, China's oil consumption, it hasn't fallen. India's is picking up. So it's not that suddenly oil consumption, oil demand has fallen off, which is often the story you hear.
That's right, yes.
Instead, its supply has gone up. So if supply has gone up, it's generally a good thing that there's a lot of supply. Of course, this creates disruption because it transfers purchasing power from the sellers of oil to the buyers of oil. Now, it takes time for the buyers of oil to demonstrate that purchasing power. Meanwhile, the sellers of oil find difficulty. Remittances start slowing down. Yes. The kind of spending that these governments do also slows down. So there will be an adjustment period, which may be painful for some. But broadly speaking, I think it reflects good news that the prices are falling because commodities are more freely available. That's good news for India, which uses a lot of commodities.
I will talk to you about whether India has leveraged that opportunity or not, but let me just talk to you about the broad discourse. And the broad discourse is that there's a lot of blame that is being put on China, but could this all be just Chinese jitters? I mean, look at our financial markets. We're off 20% from the highs that we did see. Rupee is testing levels of 68. So I'm actually asking you two questions here. Is it in some sense deja vu when you took over at the RBI? I mean, the way the rupee has been. And is there perhaps more than meets the eye here? Can we blame China completely?
Well, I don't think it's China primarily. I mean, China may be a contributor, but it's just one of a number of factors. I do think it is the point that I've been talking, others have been talking about for quite some time, that these extremely easy monetary policies have inflated asset prices.
That's right.
And that was the intent. And given the intent was to inflate asset prices, the hope was at some point those asset prices would be verified by fundamentals. But while that is happening, I think it is very legitimate for markets to question whether these asset prices are consistent with fundamentals. And so pieces of market news, such as concerns about what's happening in China, concerns about what's happening with the low oil price, does cause jitters, and people look at each other. Is that guy taking his money off the table? Is the other guy taking his money off the table? And that creates a period in which liquidity vanishes from the markets. I think that's what we're experiencing, hopefully. Over time, sanity sort of returns. People say not everybody's leaving. New money is coming in at lower levels. So there is a sense that there are lower bounds to what is happening. In
your very short stint at North Block, which was really a short stop from Chicago to Mint Street, you had once said that sleep was difficult to come by the way rupee was relentlessly falling, and we are now seeing rupee back to those levels of 68, threatening to go to 70. Is sleep beginning to worry you once again?
No, it's not, for two reasons. One, you must remember that the dollar has strengthened against many other currencies. if you look at the rupee's real effective exchange rate, even these last few falls, take that into account, we've been basically flat for about a year and a half to 2 years.
We've held on our own. Yeah.
In other words, we have depreciated against dollar, but we've appreciated against other currencies. Broadly, we've been quite stable. So I don't think this movement is something to worry about. Then the next question is, what is the appropriate value of the rupee? I think these are reasonable values of the rupee. Our concern always has been excess volatility, large moves in a sustained way in a particular direction. We have enough reserves to resist that if the need arises. We do have, I think, reasonably good policy relative to the other emerging markets. That's our first line of defense. We haven't taken a whole lot of debt into our markets over the last few months. That's our second line of defense. And the third line is reserves. But broadly speaking, I think at this point it's too early to be to worry.
So these are not levels that the RBI would want to intervene at. And I have one.
I'm not saying that. We do come in to reduce excess volatility. We're in the market in periods when there's a lot of volatility. But I would say that we're not anxious that we've suddenly the bottom has fallen out of the rupee.
There's a reason why I want to spend one more question on the rupee, because I think the markets are very nervous with what's happening in the currency, and it's only fair that we spend some more time there. Some of the top bankers that we've been speaking to here in Davos believe that it's the technical reasons why the rupee is falling. I mean, sovereign wealth funds have needs for money back home, and they're going, and these are not fundamentals. Is that a view you subscribe to?
I think there has been a fair amount of carry trade invested in the rupee, and some of that carry trade is unwinding. I also do think that there are large sovereign wealth funds that today, because of the low oil price, may have concerns about their ability to continue staying invested.
Right. Yes.
But I also think that there's a fair amount of appetite sitting, cash sitting on the sidelines, waiting for opportunities. So my sense is broadly markets will, recover at some point. I do agree that it's not clear to me that this particular move for India is justified by significant fundamentals. I mean, one issue that has been worrying some people is the cleanup of bank balance sheets.
I have questions on that, and I'll come to you that in just a bit. You were quoted today saying that the outflow of markets is a problem of the markets. It's not so much the problem of economy, which brings me to my next question. A, how do you justify these outflows? And B, how confident are you about India's macroeconomic fundamentals than you were a year back?
Well, first, I think we are in a much better place, macroeconomically speaking, and the commodity price has helped a lot. But I think also we've had good policies. Inflation is down, not just because of the commodity price. The fiscal deficit is on track, and the current account deficit has come down substantially. So all these, I think, are good indicators and should stand us in good stead going forward. We are one of, your question about volatility, we're one of the most stable emerging market currencies.
Governor Rajan, I just want to ask you a question here. When you say that fiscal position is all right, we haven't had a bonanza of $70 to $80 billion because of the crash in oil prices, and yet the whole narrative of whether we should let the fisc expand or not let the fisc expand is back on the table as we get closer to the budget. Is that something that bothers you, or do you believe, is that something that makes you believe that this is going to hurt our credibility if we were to walk down that path at all?
Well, I don't think this. Certainly there's an amount of debate going on, but I think broadly the government understands the need for macro stability, and macro stability has many components. Of course, fiscal consolidation is part of it. Growth is also part of it. So my sense is they'll make the appropriate judgments when the time comes. But I think if you put all the package together, the fiscal, the monetary, etc. We are in a reasonable situation today.
So you're not somebody who's losing sleep over the last decimal point to where the fiscal deficit will end at next fiscal?
I didn't say that. I mean, there is a certain amount of promises we have made, and to the extent we can keep them, clearly that verifies the market's confidence in what we have done. But of course, these are difficult decisions the government has to make into how much it can stay on this path. The language that has been coming out from North Bloc has typically been that they intend
to maintain the path of fiscal
maintain
consolidation.
the path of fiscal consolidation.
The reason why I ask you this question repeatedly, and even at the sound of sounding repetitive in this interview, is that a lot of people believe that in India there is this sense that if fiscal consolidation was not to be met, it's all right. We can justify it in the name of growth. But if you actually look at the discourse globally, you look at ratings agencies, and I know not too many people care about that within the government, but those are important. They are important people, and critics in fact turn around and say, if you can't put your fisc in order when oil is at 30, when on earth are you going to do that?
Well, I think those are all legitimate questions. I do think the government is seized of the need to of some of the issues of credibility that you talked about. Of course, the trade-off in how much growth you get versus how much credibility do you lose is part of the equation that one has to take up. But again, let me emphasize, Northblock has repeatedly said that this is something that they're focused on, staying on the fiscal consolidation.
The other big concern about India is our levels of growth. And I know a lot of people say it's all right when the world is growing at 2%, 3%. It's all right if we grow at 7%. But we were talking about growth levels of 8.5%. Yeah. We've tapered them down. We're likely to now grow at sub 7%. Is that something that bothers you?
Well, I like to look back to our history and look to a similar period. My sense is we look a lot like what was happening in 2001, 2002, when the global economy was not cooperating. Remember, we've had two devastating droughts also in India.
Yes.
Now, despite that, we are growing at 7+%. Okay, so there is something commendable in achieving this level of activity. Of course, no doubt helped by commodity prices, but we're still doing reasonably. But I think all the reforms that are happening, all the action that is happening, all the action the corporations are taking to become more efficient.
That's right.
They are cutting costs. They are showing that despite the top line not growing, the bottom line is growing. I think this will pay off. And my sense is we could be in a situation like 2002, 2003, when we said nothing is happening, we've done reforms, we're not seeing the action. And then we had 10 years of strong growth.
That's right, yes.
So we have to create the frameworks not to be too impatient about growth. Growth will come. Doing this level of growth with the world where it is, I think, is tremendously credible as it is.
I have a question for you, and this, and I know you will say that I do not predict rates and what I'm going to do, but my larger question really is, there was a time when inflation was bothering you, and inflation decided your monetary policy. Then, of course, Janet Yellen began to decide your monetary policy of what the US Federal Reserve is going to do with rates. Given the world that we live in, what is going to decide Governor Rajan's monetary policy trajectory?
A whole lot of things. See, if we could put it down to one variable, then we would put it to a machine. We won't need me, we won't need Urjit Patel, we won't need Michael Patra and all the other people who contribute, including the government's advice. So this is really a reasoned decision based on many factors, external, internal. It's a long-winded way of saying
I'm not going to give you an answer.
And I'm not going to give you an answer.
25 to 50 basis points is what the top notches of India Inc. that we've been speaking to here believe we can get in this year, calendar year 2016, from when we talk. Are they being too optimistic?
I have no idea. At least if I had, I wouldn't share it.
All right, let's just turn focus then to the US Federal Reserve. The US Federal Reserve did go ahead and hike rates, and then they said there will be gradual hikes. People talked about 4 hikes this year. Given the world that we are navigating in right now, do you actually believe that Janet Yellen can go ahead and hike rates anymore, at least this year? Or you expect one more rate hike to happen?
Again, I don't want to speak for the Fed. I think they will make the decision when it comes. It would be dangerous for any central bank to be guided simply by the market, because ultimately the market doesn't enter the objective function except indirectly.
That's right.
If the market collapses so much that it affects sentiment, that creates lower activity, etc., clearly they have to take that into account. But just boosting the market as a matter of principle because it's fallen, I think would be the wrong thing to do, and would create a sense that the central bank is always ready for the put option for the market.
They need to take cues from our governor here on Mint Street. The reason why I asked you that question is that some people are beginning to raise doubts about the kind of economic recovery that the US is seeing. They say it's not all that robust as it was being made out to be. Is that a concern you share?
Well, my view is that across the world we have problems with measurement. That where is all this activity that we're celebrating here at Davos, the fourth industrial revolution?
That's right, yes.
Where is it showing up in productivity? Productivity numbers look really miserable in
Very
the
weak.
US. So why is it that we're not seeing these effects? And one problem could be we're mismeasuring true productivity. There are a number of activities which are not getting picked up because they're not monetized. Today you download a movie, you're not paying for it.
That's right.
But you go see a movie in the movie hall, you're paying for it.
That's right.
It's easier seeing the movie on your TV than going to the movie hall. You're better off.
That's right.
But GDP is lower. So maybe we're not picking up some of this activity. And it is also possible that we're not measuring quality properly. The cars we drive are much better than the cars we had 5 years ago.
That's right.
But we still count them as so many cars. So it may be there's more value added that we're not picking up. And that's another possibility. So this is a more optimistic view of the world, that
That's right.
the growth is actually higher than what we pick up, which is why, despite this
Gloom and doom that we
gloom
talk
and
about.
doom, and people are worried about the future, but they may be reasonably okay.
I want to pick your brains on our neighbors right across the border. There are really two camps, and I've got the sense after speaking to people, they are non-believers in China and they believe it's an economy in a mess. The government is just making it messier by getting involved with the whole reform process. The other camp believes it's an economy in transition. Give it time, it's going to sail through. The yuan will be stronger. Which side of the two camps would Governor Rajan throw his weight
If you've
behind?
been to China and you've seen what they've done, and you've seen 30 years of strong growth,
Yes.
I don't think you discount that very lightly. Yes, people do make mistakes. That's possible. But I think it would be excessively churlish to dismiss the tremendous
Achievements
achievements they have. And you just have to take any city in China and see what they've done to say that something has happened here which is real. It's not all fluff.
So how would you caution India against the slowdown in China and the huge levels of debt that the economy has?
I'd say we need to continue focusing on our own fundamentals. Let's get our framework straight. Let's make it easier to do business as the government is doing. Let's keep macro stability in mind. Let's not get too impatient. Let's not try and generate an extra, little bit of growth at the expense of losing our macro stability. If we stay on the straight and narrow, growth will come. It has to come. Our people are inventive. Our people are very hardworking. We'll find ways. But we need to stay the course and not lose what we're known for right now, which is we're the oasis of stability.
So we are the oasis of stability, but we must speak about the business models in India. And some people have raised concerns on that. The promoter-led, leveraged businesses in India have caused concerns, in India. And I'm sure it has caused concerns with you because look at the rising levels of debt and NPAs on the bank's balance sheets. How concerned are you about that? I know it's gathering a lot of mind space with you.
Well, we certainly are working with the banks to rectify it. I think it's a manageable problem. I think the resources are there in the system to deal with it. I think the banks have the capability. Yes, we have to find some new ways of restructuring bad assets. But in general, I think this is a very manageable problem. Sometimes I'm asked, why not wait,
Yes, beyond 2017, the deadline that you've set.
Let's hope that there's no... I think broadly that's an indicative point at which we want it cleaned up. But why do it now? This is the model we've followed for quite some time.
That's
Why
right.
do it in 2008? We postponed the problem. It
And
just
look what
got bigger.
landed us, yes.
And the problem is in a number of industries, the medicine may have to be taken down because the world is not going to get any better
That's right.
in the near term. For example, the steel industry. So broadly speaking, I think we need to fix these problems before they get worse. And we need to fix it when we have the resources. The government is fully behind this, has said it would put whatever resources are needed to fix the problem. And so we're working with the banks to ensure that we do put this behind us. They have the tools. They have a whole set of tools. They have to use them properly. And my sense is we will look back and say this was a good thing we did because cleaning up allowed them to fund new growth, to take advantage of new profitable opportunities. They were better off for it.
Fair point indeed. And before I wrap this up, I must ask you a question that you've often been asked, and it's only fair we ask you all over again. The whole relationship between North Block and Min Street, your relationship with Mr. Jaitley or with the Prime Minister, gets talked about a lot. And I think, bad relations make for good media copy, so blame it on media. But how are things right now?
Perfectly good. They've always been good. I have to say that, obviously I meet Mr. Jaitley more often than I meet the Prime Minister. But there has never been any dissension in either of these relationships. So, certainly there was a period when there seemed to be frictions. But I think the understanding between certainly both these gentlemen and I, as well as North Block and the RBI, is on the highest level, and everything we talk to each other, we work things out. I can't say that I can't think of a way it could be
any
better.
other way.
It's respectful. It certainly is respectful. They listen to us, we listen to them. Ultimately, we respect each other's realm of decision making. They respect the fact that monetary policy is our realm. And we respect the fact that a number of issues, they have to take the decision, for example, on bank recapitalization,
That's right.
bank governance. They own the banks, they have to figure out how to do it.
So am I right in assuming that when the opportunity, and if at all it does arise, for Governor Rajan getting another extension, you'll be open to one?
No, that's a hypothetical question. I've always said I won't answer that. So I'll say again.
I thought Davos is going to be an exception. I'm going to get an answer out of you. Thank you very much, Governor, for speaking to us. Such a pleasure.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.